From the floor of the CME Group, this is Danny Riley on today's Cash Close. And the name of this video is actually a MrTopStep trading rule. It takes days and weeks to knock the S&P down and only one to bring it back up. The high of the day in the S&P came in at 1994.30 midday. The low came in at 1971.80 early in the day. At last, we're 1991 even. We're up 14.9 handles. Total volume, we have 2 million minis traded. We have 35,000 big S&Ps traded in the pit. And I want to remind everybody, most of that came from the S&P spread. MOC, excuse me, the MIM was showing like 300 million to sell, and the actuals came out, sell 125 million MOC. Can you say S&P jam job? I can. Tomorrow we have the MBA Purchase Applications, we have the Consumer Price Index, we have the current account balance, we have the housing starts, the housing market index number, we have the EIA Petroleum status, and last but not least, we have the FOMC minute, we have the FOMC meeting announcement, forecast, and press conference. Whoosh. Now look, MrTopStep has a couple rules, and one of them is the title of this video. And it really does take days and weeks to knock the S&P down and only one to bring it back. And that's exactly what we saw today. Now, does that mean that the S&P is out of the woods yet? I don't know, but whenever you get a retest like we got from Monday's low and it holds like that, and then you get this mammoth rip, it generally indicates higher prices. Now, the other rule that Mr. hit out on today was one of our favorite rules, and it is one of the most basic of all the things that every trader should pay attention to in the S&P, and it's that no stops go untouched in the S&P. I've been telling you guys that forever. Now look, what happened today is there is a correspondent, the chief economist correspondent for the Wall Street Journal, John Hilsenrath, I think that's how you pronounce his name. He came out saying that he thinks that there's considerable time before the Fed actually raises rates. He is the Wall Street Journal conduit between the Federal Reserve and the newspaper, and he's very well known. And then the other part of it was a story out of SINA.com that said that the BPOC was supplying $500 billion in liquidity to 5 of the largest banks in China. Now, you know what? That caused a firestorm in the S&P today. Now, we've seen some big moves, and we've seen some big buy and sell programs, but I'll tell you what, once this stuff hit the headline, it started to hit the tape, the algos picked up on it, and it was a rush to the buy stops on the upside. I can't remember anything like that in a long time, but I'll tell you what, we saw it kind of forming on the market delta imbalances, and then boom, 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 boom. Buy and balance, buy and balance, buy and balance, buy and balance. Now, you know what happens is I've been explaining to you guys for a long time. When the S&P sells off for a couple of weeks like that, it invites the sellers back in. And what do those sellers do? They put in buy stops above the market. And then when the premiums widen out and the algos start chasing the buy stops, it's those buy stops that actually lift the offer side of an index arb buy program. So it was very much a foregone conclusion. Once the market started going up, it was it was almost impossible to short. In fact, one of the guys in the room said, D-Boy, you want to short this rally? And I said, not at all. I'm not interested in shorting this at all. Now, as far as what's going to go on tomorrow, it's the second day of the FOMC meeting. It's still got the Scottish vote. You still have the quad witch, and you still have other stuff floating around out there. So to say that the S&P is out of the woods right now, I think is a little premature, but I would say when you get a big bump and grind like we saw on the upside today, it generally follows through on the upside. Now, the other part is we've had 8 Fed meetings since last September, and of those 8, the S&P has gone higher on 7 of those announcements, the day of the announcement. That said, you know what? It was a big run on the upside, guys. I think it was well-deserved. I think it was a gigantic squeeze job on the shorts, but that's what the S&P does best, and that's what I try to continue to teach you guys. We'll leave it at like that. There's a lot going on, and I'll see you tomorrow on the opening print.